Hey traders, TG Watkins here. In the last video, I taught you guys how to actually trade 0DT options. This video, I'm going to show you how understanding 0DT options and how to actually pick the correct puts or calls helped me turn $38,000 into $680,000 on one trade, and it was actually a swing trade. So I know this is a little crazy, but really 0DTE helped me understand how to swing trade options better, and that's what I'm going to show you guys in this video. So stay tuned, it's pretty exciting. So in this video, I'm going to show you guys how to actually buy the calls and the puts. Now this can be for 0DT, this can be for swing trading. The visuals that I'm going to show you, which I started showing you guys in the last video, are going to be showing you for the 0DTE and then how I actually do apply that in swing trading options. So it's going to be pretty interesting. I think a lot of people were blown away how I did this in the last video and showing you guys, and this is going to be a continuation of that, so stick around, it's going to be neat. The trade-offs between big percent gains, so like the big 2,000% gain that I did, or kind of steady gains, because when you try to go for the big ones, the 2,000%, the whatever, you know, I've even seen 3, 4, 5,000% gains on 0DT. It's unlikely for them to happen. That's why they are priced the way they are. So when they do, it's kind of a crazy thing. So you have this trade-off between something that has a more likely chance of working, so they're going to pay you less, or the thing that is very unlikely to happen and they will pay you more if it does happen, and how to choose the right strike for that. And then really the psychology of trading in the money versus out of the money, because that's really what we're talking about, is in the money or out of the money type options. And there is a psychology that goes with this, because when I did that big 2,000% trade that got me from 38,000 to 680, that thing was going up and down for several days, and I was even back at my original entry even though price kept going up, and I had to just understand that I needed to hang on to this thing because I thought the trade was correct. So I'll show you what this actually looks like, because again, the visuals are pretty important for understanding how this works. So remember, this is for educational purposes only. And once again, to understand this or study this stuff, you should go and use OnDemand with Thinkorswim. Now, maybe some of the other trading platforms have this to where you can actually go back and you can see historical stuff. But if you try to look up 0DT options or even option series that have expired, you know, over a certain amount of time, the trading platforms just won't host them. So you have to use the on-demand feature to actually get back to them. And that's what I even used for this presentation. And this is a really, really important thing for studying, going back and actually studying this stuff as if it were real, because it's, you know, once it's gone, it's kind of hard to find it again. All right, so here is the actual trade, because I want to make sure you guys, if you haven't seen this before, this is the big trade that I took, and this is how I was able to do this. So I put $38,000 on the SOXL trade, which was a $15 strike. The SOXL was trading $9 at the time. And then as we were going along, I cashed in 250% gains just so I could cover my cost basis. I know it wasn't exactly it, but if it rolled over, I would get out anyway. So I knew that I was protected, that even if the worst happened, I still had money left to trade. And then I let the thing go, and I started cashing out at a little over 2,000%, and that turned my $38,000 into $683,000. So let me show you how that worked, because this is how I'm tying the 0DTE experiences and education that I've been learning into how this worked for even a swing trade. So the difference between in the money versus out of the money. This is the SOXL call. This is a $9 call. And if you notice, this is right where I took the SOXL trade. And this is true for any stock, really. This is all going to be about the same behavior. So SOXL is the leveraged ETF of the semiconductors. Could have been SMH, could have been Tesla, like whatever. It's kind of the same idea here. So this is when I originally put on the trade. You can see it's right about $9. So here's a $9 call. And what you'll notice is as the ETF or the stock starts to go up, the value of the option starts to go up. And that's because it's in the money. As soon as the stock starts to go up, the $9 is in the money because price is now over $9. And so the option basically starts to move in a similar fashion to the stock. So you can see they have about the same angle of attack, same direction that they go, and you'll make money. You know, this was a healthy move, don't get me wrong, but it still wasn't 2,000%. I don't know, maybe it's a few 100%. You can do the math from like $2, $1 to 9, so 900% instead of 2,000%. But you didn't have to deal with a far out of the money option that didn't appreciate. So let me show you the next one. And this will be really where you kind of start to understand, like, oh, okay. If you look at this, here is the SOXL stock. And you can see, once again, this was the stock or the ETF moving up. Now look at the option. This was a 15 strike call. So this was out of the money, pretty far out of the money at the time. And you can see this is where I originally went in. And yes, as price moved up, you can see the option moved up. But anytime price either went sideways or down on the stock or the ETF, you can see the price of the option went way back down. I mean, to the point where if this was my original entry, I was equal to negative a few times. So I went up from, I think it was about 17 or 18 cents up to 40 to 50 cents and back down to my original entry more than once. Now, it could have been interesting. You could have sliced and diced this, take a little off here, buy some back here, take a little off, buy back here. Maybe that's a little bit risky. I didn't want to mess around with this. I just wanted to buy and commit to what I had planned for this trade. But this is the thing. This was the psychology that I had to understand, and that trading 0DT options really showed me this and showed me how to ride through some of this. And it showed me how to understand that even though the stock price might be going up, the option price may not be going up, or it might go up and come back down, up and come back down. And so the microcosm of trading 0DT and doing this on a day-to-day basis where you're watching this every minute or every hour really crunched my learning. It took something that this took 30 days to do. When I'm doing this with 0DT, I do it in a matter of 6 hours, 6.5 hours, because that's how long our trading day is. And so it compressed my learning. Instead of having to figure this out over the course of a month and everything else that life is throwing at you, you compress this into every single day. And so the 0DT stuff really gave me just a turbocharging compression of education and learning and practice. There's so much more practice that I get done with 0DTE trading than I do with something like this, that I've gotten like a PhD in understanding options than compared to having to do this on 30 days at a time. Okay, so it's a huge difference. And that's also why I like the on-demand features, because you can go back and you can study this stuff pretty darn quickly. So that's what we had. I originally was here. It was up, down, up, down, up. Okay, pretty crazy. You can see here that come right back down. So for as much as this thing's going up and I'm having a great trade and it's up 200% or up 100% and it comes right back down to zero, whew, you really had to kind of withstand that. Like, oh my gosh, I've got so much money on this. I've got most of the account on this. Is it going to work? Is it going to work? Is it going to work? Every time this thing goes up, it comes back down and now I'm negative. And you're really second guessing yourself. But I really had to stick with this. And then what I really want to show you, and this is where the Moxie stuff starts to kick in, because what I teach with the Moxie Indicator and how to trade stocks can be applied inside of options on these option charts. And this is the thing that on the last video, I think a lot of people were very surprised and impressed. And this is the thing that even surprised me. If you look at this option as a stock, yes, it's waving, waving, waving back and forth, but look at exactly the moment that this thing took off. It is crazy how these options also set up exactly the same way that I teach how to trade stocks. Okay, this is more specifically, this is what I call a 50-200-50 maneuver. We can get that a little bit later, but mostly what I'm looking at is that price came back into, in this case, the hourly 50 SMA, held the hourly 50, and then punched up here, and it was exactly when price was able to break past the 200 SMA. Again, these are a lot of things that I teach inside of the Moxie room and the Moxie class, and all the principles are there. Part of the reason why it wasn't ready to go back here is because the 200 was still too far away. And if you look, it was exactly here when the 50 and the 200 met and price was able to actually get past the 200. It's crazy how this timing stuff and these moving averages and these things work out. It is just bonkers how this stuff happens. And I didn't even know this. I discovered all this, and now I'm bringing it to you to show you how this stuff actually works. In a little bit of an example, I can even show you here how you can see price pulled back underneath the 15-minute 50, and that the Moxie indicator was above zero. It's what I call a trampoline move. But then you can see here how it actually held the 200, and then it started to pop. And then you just look up here, we sold it way up here at $3.40 40 or 50 cents, something like that. And that was a little over 2,000% from our original entry of about 17 cents. So pretty wild on that one. And this is what I just want to keep rehashing to you guys, is that visualizing the option is really the key to my success with options trading. I mean, forget 0DT, even just trading options in general, that is how I got better at trading options, is this little secret of being able to visualize this stuff. So for me, it's a revolutionary idea, and that the Moxie indicator and its patterns actually work on this kind of stuff. And so I say that if you can trade stock, you can trade 0DTE, because they move in a pretty similar fashion, okay? And it gives you a better feel for how options work. That's really the biggest thing for me, is it gave me a feeling and an understanding of how options work and how they move. And you can even plot spreads on this stuff, which is, again, something else that I had to learn too. And we can get that into the next video. But this is just another example where, you know, the stock underneath, the S&P, was going up here. And so I took an entry here and we took a second entry here. But you'll notice how it's basically incubating. Okay, going sideways, 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 kind of like I showed you on the SOXL trade that did really well. Sideways, 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 until finally the SPX actually starts to get inside or into this particular strike. So it goes from being out of the money to in the money, and that's where you go from this incubation period to suddenly growing in value. And that's just the nature of out of the money type options. So I'll show you one more example, but then I'll show you how the difference between in the money and out of the money continues to work. Here's just another example. Once more, again, you can see that the SPX continued to move up, but look at this particular out of the money call. It wasn't moving. It just kept, incubating until finally price started to actually get into that strike, and then you can see suddenly it expanded. And it's experiences like this that I've had over the last year or so that I've been learning and teaching myself and just experiencing taught me that I can be right on the movement of the stock, and the option may not respond, but not to get cold feet or not to chicken out or not to be like, oh my gosh, this isn't going to work, and throw in the towel too early, because then you see all of a sudden it hits. And it was this kind of behavior that I knew because I was able to visualize it more than just looking at the trade the options table, because that really doesn't tell you much as far as this goes. I knew to just wait, and then it was going to explode. And that's what it did. Okay, same kind of behavior on here, and it's the same behavior with 0DT stuff. So how do you actually pick the strikes, and how do you do this? I showed you guys this on the last screen, but really this is important for the SPX, $1 to $5. Now, $1, that's pretty far out of the money. The likelihood that it's going to work or become in the money is pretty slim. So, maybe that's going to have to be a big day for something like that to pay off. So really $3 to $5 is better. Now, if you want to do the SPY, you just correlate it to something like that and you can figure out what it is. If you're picking too cheap of an option strike, the markets are telling you that that strike is very far away and unlikely to work. If you're picking one that's too expensive, it will move just like the SPX and won't give you that potential for the exponential growth that I showed you as the SPX or any stock gets into those strikes. So it's a trade-off. It's a balance between these things. And you have to say, well, if it's too expensive, okay, it's in the money. I'm a little bit more guaranteed, air quotes, about if the price moves up, the option will appreciate. And you just have to decide which one do you want. And it really kind of depends on either the character of the stock, what's happening, how big is the move going to be, or what is the character of the day for the market, okay? If there's a big unexpected move, these cheap options will suddenly appreciate in value. So let me kind of keep showing you a few more examples of what this looks like. This happens to be today. So we had a pretty good trending day in the SPX. Market just was stair-stepping up all day long. And here was a out of the money call. You can see 59.70, okay, out of the money. Look here. Here is the Moxie price trigger. So again, the Moxie indicator works well inside of options, inside of 0DT options. Again, crazy how this actually works out. I never expected this. And you could see when price started to actually get up and over these moving averages. And from basically here, because I tried to pick the same spot, to the top, this appreciated 400%, okay, out of the money, because we went there. That's how far this thing was. Now the in the money, also same entry. Notice the Moxie price trigger. That's what those arrows are, Moxie price trigger. And you can see here to the same point, it only went 200%. So when it works, the out of the money option, whether it's a call or a put, will appreciate more. You will get more percentage out of it, okay? Now the other thing to pay attention to is if you overstay your welcome. Because this is an out of the money option, if it goes up into the money and then the market kind of backs off a little bit and gets out of the money, you are going to lose value very, very quickly because that option really didn't have much value to begin with, and suddenly it became out of the money. And now the likelihood that this strike, the market, is going to close at or inside of that strike or that price, that option, is very slim, and you can see now you've just lost all your value. Now compare that to the in the money option, strike, and you can see that even when the market backs off a little bit, you can see here it still held its value from the morning because it was in the money. It actually has value compared to out of the money that closes pretty much outside of the money. It didn't actually get there, and so this is virtually worthless because it's just not there. Okay, so these are some of the things that if you're going to be trading out of the money calls or puts, 0DT, or even swing trading, if you are going to want to keep it, you need to understand that if the move backs away from where it once came, you're going to lose value very, very quickly. That's why with those SOXL options, I knew I was not going to keep this into expiration. I was going to sell it before it expired. And that's just something you need to understand about this strategy. Now, if you want to keep it, or if you want to be able to ride it a little bit longer, then your strategy is you're going to have to stick with in the money a little bit more, because as the market goes up, even if the market backs off a little bit, you will maintain a value because you now have value because the strike is in the money. Okay, so hopefully that all kind of makes sense. I'll keep showing you a couple more examples. Now, this was yesterday, and this is an example of where you didn't really have a trending day. It was kind of bumpy. You can kind of see that here. And look at the difference of, okay, call it risk, about the out of the money, so 59.30 out of the money, and from the original entry here, there's your Moxie price trigger. And let's just say, now, this one, by the end of the day, did happen to get up to here, and it did happen to close at this price. 200% gain. You're thinking, wow, that's really amazing. I would take that all day long. But look at the path. And this is really where visualizing options is pretty darn neat, because this was a rough ride. You know, even if you got in here, you're negative, you're negative, you're negative. You're basically losing money all day long until finally the market moves up into or near that strike, and then suddenly it becomes worth something. Now, as it gets closer and closer to the end of the day, this thing is just barely getting to that strike. You know, the SPX is just barely getting to 59.30. And, you know, the market's saying, I don't even know if it's going to close in the money, because if it doesn't close in the money, it's worthless. And you can see here, maybe 30 minutes, less than 30 minutes before the market closed, this thing is worth minus 13% from your original entry because, oh boy, it doesn't look like it's going to close in the money. But then suddenly it closes up here. This is stuff that I don't want to have to deal with. This is way too risky if you're going to put any size of money on here. And this is the risk of trying to pick a strike that is too far out of the money, and the market may not actually get there. It's a pro and con, okay? So it's really great when it's great, but you have to understand the risks that go with it. Whereas if you pick something that's more in the money, you can see from the same entry, it went 170%. Hey, not that far off from 200. You know, 30% difference, not that far. And look at the risk that you didn't have. Every low was higher. So every pullback, you're still making money. You're still actually doing better. And then once the market finally jumped up at the end of the day, great, you're making even more money. And so this is a little bit easier, softer, kinder to you. You know, it doesn't stress you out quite as much from the original entry here. You know, here you're making higher lows. And so based on the character of the day, which we don't know what the day is necessarily going to look like, but if you want something that's a little bit more conservative, that you don't have these things where you're going to go negative if the market comes down, you're going to want to pick a strike that is closer to in the money or at the money in order for it to move like the market and appreciate in value, even if it slowly goes that direction. Because remember, you have theta decay working against you. That's why this thing kept going down, even though the market was gently kind of going up. Theta decay was overcoming the appreciation of value. That's another video we will make and talk about with this theta decay situation. Okay, so I know one of the questions that's going to happen is buying and trading SPX at the money is really expensive, and yes, it is. One contract's going to be a few $1,000s. Okay, that's not fun. So what are your options? What can you do? Well, you can trade the XSP, which I don't know if a lot of people know about this. This is basically the same size, so it's the same price as the SPY, but there are some benefits to be trading the XSP and the SPX, namely tax benefits. So if you want to do that and look into those tax benefits and differences, go check that out if you want to do something there. Or you can just trade the SPY. The SPY is 1/10 the size of the SPX, therefore the options are much cheaper. And if you want to say, if you're saying, hey, I only want to spend $500 per trade, well, trying to trade SPX in the money, not going to happen for $500, but it will happen for the SPY. So if you are working with a constrained dollar amount that you want to trade with, then you just need to be able to find those options or the right kind of vehicle to get you that. And if you still don't want to do that, or if you do want to trade SPX, but you want to trade at the money, but you want it to be cheaper, then do spreads. So call, debit, spreads. And that's, we'll talk about that in the next video, because this is another fun one. This is where you can do the same idea, cost less, lower your risk. You will be capped if the market does move a lot, okay, so just know that. But you can also then flip this around and you can sell spreads. So notice how, I think the thing is that 80 or 90% of all options expire worthless. Well, you could be on that side where you have like an 80% chance likelihood of the trade working out, and you can do that. So that's going to be the video that I make next for you guys. And if this sounds interesting, if you want to do a deeper dive into everything I just showed you, we do have the class here. It's the SPX 0DT breakout session. I just recorded it a few weeks ago. We're getting really great reviews about it. People, their minds are just getting blown. It's amazing. They are seeing things like they've never seen before, and they're finding it really, really interesting to see this the way that I see it now. And again, my eyes had to be opened. Nobody talks about this stuff. Nobody. I'm in the business, and nobody talks about this. I had to figure this out on my own, and I really just kind of stumbled across it. And ever since I've been talking about it, people keep telling me, they're like, wow, I didn't know that happened. I didn't know this was possible. Or even the people who said, yeah, I kind of knew that was the thing. They didn't know what to do with it. It's like having a tool that somebody gave you and you're like, great, what do I do with this? And so this is what I'm teaching you guys of how to do this. It has been around, it's been on Thinkorswim. You can do this everywhere, but nobody talks about it. It is the craziest thing. And then what you can do is you can pair this with the leverage ETF breakout session. And this is also how I've now combined leverage ETFs with options trading, swing trading, and how I get all this. And that is the secret of how I combined my ability to zero DT day trade with these leverage ETF trading, combine it, and I made 2,060%. I made, what, $38,000 to $680,000 on that one trade because I saw the opportunity. And it's these two classes combined that gave me that. So this is where you guys can pick it up. Obviously, simplertrading.com. You can have it down here. We're going to have the link down in the bio. Also, come join us in the Moxie room, because this is how I teach people. This is how I talk. This is what I do. We're getting a lot of great people coming into that room, and people are they're having a good time. We have a good room, good class, and it's been fun. I love doing this. I eat, sleep, breathe it, And so I just want to make sure that you guys are benefiting and along for the ride. That's what we do here, okay? People put a lot of time and effort in me, and I want to be putting it back out there for you guys. Okay, so thanks again for tuning in, and we'll see you at the next video. Hey, TG here with Simpler Trading. Thanks for watching. If you enjoyed this video, be sure to leave a like or comment below. Also, make sure to subscribe and click that notification bell so you can stay up to date with my market analysis. Or you can join my free newsletter with the link in the description. Good trading, and I'll see you at the next video.